Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 24th Jan 2020. Well, finally, the bulls heaved a sigh of relief yesterday after the selling spree of three consecutive sessions. The benchmark index recovered sharply to close near the day's high. The index Nifty spot almost retested 12,200 mark from the lows of 12,094 to end the day with gains of around 75 odd points. Meanwhile, the Nifty Bank Index gained over 300 points from its previous close to recapture the 31,000 mark. The market breadth in favor of advancing counters with 990 advances versus 633 declines. The market breadth turned positive after a losing streak of three trading sessions. On the sectoral front, apart from the Nifty Media, all the other group indices ended in green. Among the gainers, Nifty Realty and Nifty PSU counters ended with significant gains. Coming to the derivatives part, there is no major change by the action of FIs in index futures. They once again remained bearish yesterday by adding fresh short positions. However, in index options, they remained neutral by covering their positions amid the weekly expiry. So, in rupee term, if we see FI sold index futures of around 416 crores, it's a fourth consecutive session where we are witnessing selling in index futures, and index options they were buyers of around 2900 crores. In cash, FIs were buyer of 1352 crores while DIS sold equities worth 985 crores. So even yesterday's price action of Nifty future was bullish but with marginal change in open interest, and even the volumes were moderate. This indicates there were no the majority of the positions were intraday only, and there was no carry forwarding of any kind of positions. The premium of Nifty future is now at 20 points from 38 points, so the premium reduced by around 18 points yesterday despite the positive price action. The PCR has now reached to 1.31 from the lows of 100. So this was already expected. As per Nifty option chain now, since we are at the final week of monthly expiry, 12,000 strike put has a heaviest open interest of around 4 million shares, that is 40 lakh shares. So we feel that at least for this expiry, 12,000 would be a strong support psychologically as per the option change data also. On the upside, 12,200 could be an immediate resistance because of around 2.8 million shares in 12,200 strike call. But since we are very much near to 12,200 odd levels, that is the closing of Nifty is 12180. So once it clears 12,200, there could be a short covering in those call options. But if we see positionally, 12,300 could be a very strong hurdle because there is the highest open interest of around 3.2 million shares. So for the coming week, the range will be 12,000 on the downside to 12,300 on the upside. Coming back to technicals, in our previous recording, we discussed that 12,100 to 12,040 odd levels could be a temporary support, could act as a temporary support for the market. So yesterday we witnessed a bounce back from there only. So for the coming session, technically 12,200 to 12,250 odd levels are could be seen as a strong resistance. But we reiterate our view that just ahead of the budget, all the longs should be booked even if we rally towards 12,300 to 12,400 odd levels. On the downside, breach of 12,100 would now further damage the sentiments. On the stock front, yesterday we covered HDFC Limited. We discussed HDFC Limited. We continue to remain bearish on HDFC Limited. So this stock is sell on rise. Current price is 2430. One can again sell this stock on a bounce near to 2450. The stop loss is 2500 and the positional target on the downside is 2350. Another stock is Indian Bank. It has results today, but technically it's look really good. The closing price is 104. Stop loss should be shifted to 98. Earlier it was 96, and upside target is 116. Third stock is Gale. The closing price is 129. The stop loss should be around 125 and upside target is 138. So with this we end the technical view. Now I'll hand it over to Mr. Dharmesh Kant. Thank you very much, everyone.
Yeah, good morning all. Muted kind of a trading session was observed in the global markets yesterday. particularly in the US market, though European markets traded with a negative bias. There was marginal cut of around 0.3 to 0.4% on respective indices. So the talk about coronavirus and all, I don't think it merits any attention. This is just, there is to be justification of any event in the market, and now they are citing this. This has nothing to do with the market, and it's a very small thing as of now. And historically, I think you must have read all the WhatsApp forwards where the analysis has been done, how the market behaves in case of any such kind of an outbreak. So it doesn't look like as of now. Bond yields in US remained, muted. At the same time, currency there has not been a significant development. What the development has been into the commodity market. Most of the metal prices are down 1 to 2% on the LME bounces. At the same time, gold has also taken a hit, so flight to safety is not being seen there. Oil has been corrected significantly for the last 2 3 session, and yesterday also it was down 2% overnight. So this is a good news for the Indian market because macro headwinds won't be there on account of rising oil prices. Yesterday in our market we did see a bounce back, but it was not very strong kind of a bounce back. It was just 50 60 point rally on Nifty, and which was also used for profit taking. From here on till the time the budget is rolled out, so the theory will again play out. Any correction is there in the market, buy it. Don't chase the rally. So the view is very simple. If market is 1% up, buying there, the risk reward ratio won't be favorable. However, if an opportunity comes through when the market has corrected, and if you are buying there, you may still make a profit. And post budget, we'll see what the budget outlines are and how to trade this market. Results, nothing significant came out yesterday. Canara Bank was there, but it was a mixed set of earnings, not a major directional takeaway one can draw from the earnings of Canara Bank. Today also Indian Bank will be coming out with their earnings, and let's see what the earnings are. These two banks can at least give a prelude to how the PSU banks may perform going forward. But let's not forget, many of the banks have gone for NCLT regulation for the respective asset, and if those goes through, 40% of that has to be provided for in this quarter itself. So I don't know about Indian Bank, but if something comes through, the profit would be taken a big hitting out there, and then you can see the selling coming back into the play. However, the stocks which look good for buying on declines and which can give you at least trading bets. See, if you look at the texture of the market, there has not been any sustainable gain in the market. So if it's a 1 day up, 2 day down, or 2 day down, 1 day up kind of environment is there. In this scenario, I think RBL Bank, Axis Bank, Larsen and Toubro and Sun Pharma. These are the four stocks which can be used as a buying opportunity for declines. Technical levels you can always take from Mehul how to trade it. But if one is looking at these four stocks, Axis Bank, RBL Bank, Larsen and Toubro and Sun Pharma, to be bought on declines, you can end up by intraday trading gain or a couple of days if you're holding the position, you may make 2 or 3%. Nothing beyond that looks to me as of now. So that is all from our end for the day. So play tentatively, play it as a trading bet as of now. Don't carry the positions if you are making profit. Take the profit, and next day has to be negotiated on a new beginning. Thank you so much. Have a nice day. Happy trading.